The Church of Jesus Christ of Latter-day Saints, widely recognized as the Mormon Church, has emerged as a colossal player in the world of hedge funds, entangled in complex business dealings and non-transparent corporate maneuvers. The U.S. Securities and Exchange Commission, typically the watchdog against insider trading and stock manipulation, slapped the Mormon Church with a $5 million fine. The reason? Failure to disclose stock holdings, cleverly distributed across 13 shell companies to obscure the church's investment activities. This revelation might seem outlandish, especially when a religious institution faces allegations akin to major corporate fraud. But the intricate web woven by the Mormon Church only thickens. The church mandates a 10% tithe on its members' income, benefiting from tax-deductible contributions. For instance, a church member earning $100,000, taxed at a 30% rate, would funnel $10,000 annually to the church. Out of this, $7,000 would have otherwise been personal savings, while $3,000 would have gone to the IRS. This setup implies that the government is indirectly funding 30% of the church's income through tax breaks. Though the church isn't required to disclose its annual income, a collaborative analysis by Reuters and University of Tampa, sociologist Ryan Cregan suggests a staggering figure. The Mormon Church reportedly rakes in at least $7 billion each year in tithes and other donations from its dedicated followers. This financial prowess positions the church not just as a religious beacon, but also as a formidable force in the global financial market. The Church of Jesus Christ of Latter-day Saints, often referred to as the Mormon Church, operates an extensive financial network that goes beyond its religious activities. While a portion of its funds supports clergy salaries, church maintenance, and community programs, a significant surplus is consistently generated. This excess is channeled into a trust overseen by the corporation of the President of the Church of Jesus Christ of Latter-day Saints. The President, holding dual roles as a cultural and managerial leader, controls this corporate entity which manages the church's additional finances. Among the major assets held by the corporation are an educational division, including Brigham Young University, a research institution known as the Intellectual Reserve, and the Polynesian Cultural Center in Hawaii. This tourist site was established to provide employment and scholarships for Mormon students at a nearby university also owned by the church. Another critical entity is the corporation of the presiding bishop of the Church of Jesus Christ of Latter-day Saints. Although subordinate to the president, the presiding bishop wields substantial power and manages day-to-day affairs. This entity controls the Deseret Management Corporation, the church's private equity arm. Deseret Management directly owns several for-profit businesses like Beneficial Financial Group, Bonneville International Corporation, and Utah Property Management Association. These companies enjoy a captive customer base from the church's 16 million members, reducing the need for external advertising. The holdings extend to agricultural reserves, farmlands, real estate, suburban homes, and the lands on which the church's temples stand. Altogether, these assets are valued at over $100 billion. However, the centerpiece of the church's financial prowess is Ensign Peak Advisors, a discreetly named company managed by the bishop's holding company. This entity, one of the world's largest hedge funds, manages over $40 billion and was at the heart of the recent SEC allegations. Ensign Peak Advisors is at the core of the Church of Jesus Christ of Latter-day Saints investment strategy, focusing primarily on publicly listed securities. Unlike the Deseret Management Corporation, which handles the church's direct ownership of companies, Ensign Peak Advisors' portfolio includes significant investments in tech giants like Apple and Microsoft. Their $40 billion fund encompasses a vast array of companies and securities. The church's hedge fund faced legal scrutiny due to a complex structure established 2 decades ago. It created 13 subsidiary holding companies under its investment arm, each deliberately keeping their holdings below $100 million. This strategy was employed to obscure the scale of their financial assets, exploiting a legal loophole in the reporting requirements. The significance of these filings lies in the SEC's Form 13F, a mandatory disclosure for institutional investors managing assets over $100 million. These filings are public and crucial for transparency in the market, as they inform investors about significant shareholders capable of impacting a company's stock price. By distributing its investments across multiple entities, Ensign Peak advisors aim to avoid public disclosure and maintain secrecy over its vast holdings. However, this tactic of concealment backfired when the SEC imposed fines on Ensign Peak advisors and the church itself. Although the total fines of $5 million were a fraction of the church's total assets and the hedge fund's likely returns during the investigation period, this legal misstep drew attention to the church's opaque financial practices. In response to the SEC's actions, the church has publicly acknowledged its wrongdoing. It has committed to complying with regulatory requirements moving forward, taking steps to ensure transparency and adherence to legal standards in its financial dealings. The Church of Jesus Christ of Latter-day Saints has made it clear that its investments are solely for supporting its mission. This statement carries significant weight because the church's entire corporate structure, including its complex layers of holding companies, operates tax-free. This status stems from its religious foundation, allowing it to accumulate wealth without IRS interference. As the church already has more money than it spends, this investment portfolio is poised to grow even more influential. One of the more concerning aspects of this vast wealth is the church's potential to sway business decisions. With substantial shares in hundreds of companies, church leaders could pressure corporate executives to make decisions aligning with the church's interests, ranging from conservative business practices to favorable media coverage in their invested organizations. However, the Latter-day Saints aren't alone in amassing immense wealth. Take Eagle Mountain International Church, a non-denominational Christian church led by prosperity gospel preacher Kenneth Copeland. Unlike the Mormon Church, Eagle Mountain's members, though fewer and less affluent, are urged to contribute generously, often at great personal sacrifice. Eagle Mountain operates less like a corporate entity and more like a family business centered around the Copelands. In 1998, the church relocated to a 33-acre former Marine Corps air station, an unusual setting for a church. Yet, the real attraction was the airfield, which the church converted into Kenneth Copeland Airport, complete with 5 private jets. The estate also includes a lavish $7 million home owned by the church but provided rent and tax-free to the Copeland family as a parsonage. With churches employing such effective strategies for building tax-free wealth, one might wonder about the feasibility of starting a personal church for similar benefits. John Oliver, host of Last Week Tonight, famously highlighted this issue in a segment on prosperity gospel churches, including Copeland's. Oliver's satirical response was to create his own church, exposing the ease with which tax benefits can be exploited. Discussing the Kardashians was never the intent for this channel, yet it's impossible to ignore the influential matriarch Kris Jenner in the context of church-related financial dynamics. Kris is the co-founder of the California Community Church, a religious organization that has seen significant financial contributions from the Kardashian family. Reportedly, the family donates 10% of their income annually to the church, a substantial sum considering their vast wealth. This level of funding is more than sufficient for the operations of a local church. However, The California Community Church has had its share of controversies, including accusations of state tax violations. This has led to speculation that the church may serve as a convenient tax shelter for the Kardashians. Another notable figure is Mel Brooks, who oversees the nonprofit foundation A.P. Riley. This foundation funds the Church of the Holy Family, located on a secluded 17-acre estate in the Agora Hills of Los Angeles. Brooks has donated millions to the church over the years, including the earnings from his film The Passion of the Christ. The information about these smaller churches is scarce, and the IRS tends to exercise caution in probing too deeply into their affairs. If the idea of being a megachurch preacher sounds financially lucrative, then it's also a path that might appeal to those with a certain moral flexibility, akin to those who would profit from America's water shortages during a severe drought. As we've uncovered the complex financial world of certain churches, it's clear that the line between faith and finance can sometimes blur. But what are your thoughts on these revelations? Do you think these practices align with the true essence of religious institutions? Drop your opinions in the comments below. And if you found this exploration intriguing, don't forget to like, share, and subscribe for more deep dives into unexpected facets of finance and society. Your support and engagement are what drive us to uncover more such fascinating stories.